Hello everyone, welcome back. I'm Mark Blunden with eXp Realty, serving Laguna Woods Village and South Orange County. If you're buying, selling, investing, or simply keeping an eye on the market here in the village, this video is for you. Every month, we analyze the latest numbers, separate the headlines from the reality, and help you understand what is actually happening in one of the most unique housing markets in Southern California. Because Laguna Woods is not just one market, it's really several markets operating under the same gates. Different mutuals, different buyer pools, different ownership structures, different price points, and if you want to make smart decisions as a buyer or seller, understanding those differences really matters. So let's dive into the May 2026 data. If you're new here, welcome to Living in Laguna Woods Village. On this channel, we talk about what life is really like here, from real estate and market updates to lifestyle, amenities, hidden gems, and everything you need to know before making a move. And if that sounds useful, consider subscribing to the channel. Now, let's get into this month's numbers. Here are the top things to know from May's data. First, inventory moved higher. Active listings increased from 202 up to 211. That may not sound dramatic, but it continues a trend we've been watching for several months now. Buyers have noticeably more choices than they did at the beginning of the year. Second, speed dropped. Days on market increased from 17 up to 35 days in May. That's a significant shift and perhaps one of the most important statistics this month. Third, pricing softened again. Median sales price moved from $519,000 in March to $476,000 in April and down to $380,000 in May. Now, before we jump to any conclusions, we need to remember that Laguna Woods is a relatively small market. The mix of homes that sell each month can dramatically influence the median price. However, we have now seen 2 consecutive months of declining median sales prices, and that deserves some attention. Fourth, negotiation loosened. Percent of original list price received fell from 98.7% down to 96.9%. Buyers are gaining a little more leverage than they had earlier this year. Next, closings increased. Closed sales moved from 42 up to 59, and that's a strong increase in transaction volume and an important reminder that homes are still selling. And finally, months supply of inventory increased from 4 up to 4.4 months. Taken together, all these numbers suggest a market that is becoming more balanced and more selective. Now, let's take a deeper look at inventory. Active listings increased from 202 up to 211. Now, in many markets, an increase of 9 listings might not mean that much, but since Laguna Woods is relatively small and specialized, every increase in inventory matters. And what we're seeing is a gradual expansion of buyers' choice. Earlier this year, buyers often felt pressure to make decisions quickly because options were limited. But today, there's a little more breathing room for buyers. Now, if you're a seller, this means your home is competing against more alternatives. Buyers have more opportunities to compare properties, compare floor plans, and compare locations and negotiate. It doesn't mean sellers are at a big disadvantage. It simply means that preparation matters more than ever. Homes that are priced correctly, presented well, and marketed professionally continue to attract attention. If you're a buyer, this increase in inventory is generally good news. More choices mean a better chance of finding the right fit rather than settling for the best available option. Now, let's talk about speed. Days on market increased from 17 days in April to 35 days in May. That's more than double, and this statistic tells us a lot about the current market conditions. What it tells us is that buyers are becoming more deliberate. They're taking longer to evaluate their options, they're comparing properties more carefully, and they're becoming more selective. If you're a seller, you should adjust your expectations accordingly. The market is no longer rewarding every listing with immediate activity. The best homes are still selling quickly at or near the list price, but buyers are becoming less willing to overlook pricing mistakes or deferred maintenance. Now, if you're a buyer, this is encouraging. It means you have many opportunities to negotiate that didn't exist a few months ago. It also means you may have a little more time to evaluate your options without feeling rushed. Month supply of inventory increased from 4 months up to 4.4 months. This is one of my favorite metrics because it provides a snapshot of the overall market balance. Generally speaking, 5 to 6 months of inventory could be considered a balanced market. And at 4.4 months, Laguna Woods is moving closer to that balance point. What it means for sellers is that you still have an advantage of limited supply relative to demand, but not to the same degree we saw earlier in the year. And for buyers, it means opportunities are improving, the market is becoming more cooperative, you're seeing a little more inventory, a little more negotiating room, and a little less urgency. The key takeaway is that neither buyers nor sellers have overwhelming control right now. We're moving more towards a balanced market environment. Now, let's look at negotiation. Percent of original list price received fell from 98.7 to 96.9%. It may not sound like a large change, but it's meaningful. Earlier this year, sellers were keeping almost all of their asking price, but today buyers are having more success negotiating. For buyers, this means opportunities are improving. It doesn't mean every seller is willing to discount heavily, but it does mean there is more flexibility than there was 6 months ago. For sellers, this reinforces the importance of accurate pricing. Today's buyers are paying attention. Overpricing can lead to extended marketing times and ultimately larger reductions later on. Closed sales moved from 42 to 59, and that's a substantial increase. This statistic is important because it counters the narrative that a softer market means a weaker market. Homes are still selling here, people are still moving, buyers are still active. In fact, we saw significantly more transactions close in May than in April. What has changed is not demand itself, but buyer behavior. Buyers are becoming more selective and more price conscious. Now, let's talk about pricing. The median sales price declined again in May, moving from $519,000 in March to $476,000 in April and down again to $380,000 in May. That may seem dramatic, and it would be easy to assume that home values in Laguna Woods have suddenly fallen off a cliff. We don't believe that's what the data is telling us. What I think we're seeing is a combination of two things. First, the mix of homes that sold in May skewed more heavily towards lower priced properties, particularly in United Mutual. And second, the market itself has clearly become a little softer over the past couple of months. Buyers have more choices, they're taking longer to make decisions, and they're negotiating more aggressively than they were earlier in the year. So while I would not interpret this as a collapse in values, I would also not ignore it. We've seen 2 consecutive months of declining median sales prices, and it's definitely worth paying attention to. The key point, however, is that no homeowner should use the overall Laguna Woods median sales price to estimate the value of their own property. The value of your home depends on your mutual, your floor plan, your location, your condition, and the specific buyer pool that property appeals to. Price per square foot also declined in May, falling from $446 down to $381. This statistic is interesting because price per square foot tends to be less influenced by the size of homes that sold and can sometimes provide a clearer picture of underlying pricing trends. Taken together with the decline in median sales price, this suggests the market has softened somewhat over the last 2 months. Buyers are gaining a little more leverage, and sellers are having to work harder to to achieve the same results they may have achieved earlier in the year. That said, and this is very important, the best homes are still selling very quickly at or near list price. Updated properties in desirable locations do continue to attract strong interest. What has changed is that buyers are becoming more selective and sellers are facing more competition. The practical takeaway is that pricing strategy matters today a lot more than it did 6 months ago. Hi, it's Mark here. If you're exploring 55+ communities in Orange County, such as Laguna Woods Village, subscribe and hit the notification bell. Whether you're moving in 9 days or 9 months, we'll walk you through everything from floor plans to financing, HOAs, and monthly costs. Call, text, email, or schedule a Zoom below. We're here to make your move simple and stress-free. Now, let's go mutual by mutual, because honestly, this is where Laguna Woods gets really interesting. It's difficult to analyze this community as one giant market. United behaves differently from Third behaves differently from the Towers. You have different buyers, different ownership structures, different price points, different lifestyles. And understanding those differences is where real market expertise matters. United Mutual posted 25 closed sales in May, median sales price $375,000, days on market 35. Sellers received on average 100% of their asking price. What that tells us is that buyers remain highly focused on value. United continues to attract buyers looking for affordability, greenery, walkability, and the unique co-op lifestyle. Buyers are still willing to pay asking price for the right property. However, presentation and pricing matter more than ever. The homes that stand out are the ones getting the results. And buyers, the increase in inventory and longer marketing times are creating opportunities, but don't confuse balance with weakness. Desirable properties in United continue to attract strong attention and move quickly. Third Mutual posted 26 closed sales. The median sales price was $537,500, days on market 21. Sellers also received about 100% of their asking price on average. This tells us that Third Mutual remains a strong segment of the market in the village. Buyers continue to place a premium on condo ownership, financing options, garages, elevators, views, and some of the larger floor plans available within the village. Sellers, demand remains healthy in Third, particularly for updated homes in desirable locations. If you're in Third Mutual, the market is still working very much in your favor. Buyers expect competition for the best properties. Third Mutual continues to attract strong demand and remains one of the most sought after segments of Laguna Woods Village. The Towers recorded 8 closed sales in May with a median sales price of just under $30,000 and median days on market of 55. As always, the Towers operates very differently from the rest of Laguna Woods Village. Buyers here are not simply purchasing real estate, they're purchasing a lifestyle package that goes above and beyond what you get purchasing in other parts of the village. So that includes dining credits, housekeeping, transportation, social opportunities, security, maintenance, and a level of convenience that many residents find extremely attractive. Because the buyer pool is more specialized, properties in the Towers often take longer to sell than homes in United or Third. It's not necessarily a sign of weakness, it's just a reflection of the different motivations and priorities of Towers buyers. Sellers, patience and proper positioning remain important. Marketing the lifestyle benefits is often just as important as marketing the residence itself. And buyers, the Towers can be an attractive option if convenience, social connection, and reduced day-to-day responsibilities are priorities for you. However, it's important to evaluate the entire financial picture including the significant monthly assessment and the different services provided, rather than focusing solely on the purchase price. Now, if you remember one thing from this month, remember this. The market is clearly softer than it was earlier this year, but healthy demand remains. Homes are still selling, buyers are still buying, and sellers can still achieve excellent results. The difference is that today's market rewards preparation, presentation, and pricing strategy far more than it did 6 months ago. It's a selective market. In summary, inventory increased, marketing times increased, negotiation improved for buyers, closed sales increased, and pricing softened for a second consecutive month. Taken together, these are the characteristics of a market that is becoming more balanced and more selective. It's not a weak market, it's not a distressed market, it's a more thoughtful market. Looking ahead over the next 60 to 90 days, we expect inventory to remain elevated compared with the beginning of the year. We expect buyers to continue enjoying a little more negotiating leverage. We expect the best properties to continue to perform very well. And we expect the gap between exceptional listings and average listings to become even more pronounced. For buyers, that means opportunities, and for sellers, it means strategy. And for both sides, it means working with someone who understands the nuances of this very unique market. If you would like a true mutual level snapshot for your home or home search, including pricing strategy, days on market expectations, negotiation positioning, and a full monthly cost breakdown, reach out anytime. You can call or text on 949-599-4086, email us or schedule a Zoom. All our contact information is in the description below. I'm Mark Blunden with eXp Realty. Thank you so much for watching, and we'll see you in the next video.